many investors are wondering when companies will begin to see returns on their AI investments. Well, the Wall Street Journal is offering some insight into that question. It says the AI startup Anthropic is on track to turn a profit ahead of its chief rival, OpenAI. That's according to financial documents seen by the Journal, which show Anthropic is set to break even for the first time in 2028. As for OpenAI, it forecasts operating losses of $74 billion in 2028. Berber Jin is the Wall Street Journal reporter behind this story and joins me now. It's great to have you here. So it was so fascinating to read about this in your piece. As you looked at these financials, there is this path to profitability for Anthropic. Just walk us through how very different the approach is from these two companies that are getting so much attention and money.
Yeah, so Anthropic and OpenAI, bitter rivals. They're both startups that lose a lot of money. But Anthropic is on pace to turn a profit a lot more quickly. And they're spending a lot less than OpenAI on the chips and data centers needed to build and run AI models. And they also run an enterprise business. They primarily sell their chatbot to corporate customers instead of consumers, mass market consumers, as OpenAI does. And that just makes for a more efficient business model because they don't have to subsidize all the people who use ChatGPT for free or use Sora for free. Corporate customers tend to pay at higher and more predictable rates. So, they have a slightly more efficient business model, which obviously can help them a lot, if the market begins to cool a bit on funding these companies.
Absolutely, and I do want to talk about the market potentially cooling in a moment. But when we look at, too, what is needed to support the efforts of these companies, there has been so much talk about infrastructure and power, as we know, which is key to the AI industry and to its growth. But there are significant questions that you address as well about whether the U.S. really has the capacity, right, to support the growth that has been promised. Where do things stand in terms of what is needed on the back end?
Yeah, so, obviously OpenAI made a lot of headlines this summer. Chief Executive Sam Altman said that they are on the hook for up to $1.4 trillion in infrastructure commitments. So that's the chips and the data centers needed to power AI. That almost is just too crazy to believe, right? That company is set to make only $13 billion in revenue this year. And he's kind of taken the stock market on a roller coaster because of these announcements, raised a lot of questions about whether the US or the world, frankly, has even enough power to make those ambitions come true. Anthropic presents a kind of, if you look at the financials, a contrasting picture where they're saying that they don't need to spend anywhere near that amount to be able to build and power their AI models. So either Anthropic's discovered something that they're not sharing, that makes these models run much more efficiently, or they're underestimating how much they think they need, or OpenAI is just kind of going, completely out of reasonable expectations in terms of what they're trying to spend. So a lot of interesting questions that the contrast in the performance of these two companies raises.
Yeah, absolutely, and over all of that, right, are the, I think, maybe not newer questions, but questions that are certainly getting a lot more attention recently about AI itself, right? And whether this massive investment by so many is actually going to pay off, or perhaps concern that maybe this is not going to be what some investors thought it would. How much is that playing into what we're seeing in this moment?
Yeah, so I think, there are a lot of reports out there from very credible analysts who say that essentially AI will have to make trillions of dollars in revenue by 2030 in order to make up for all of the spending that's going into data centers and chips. And, this isn't just OpenAI and Anthropic, of course. You have Meta, Microsoft, Amazon. They're all investing very aggressively into building out their infrastructure. And a lot of those companies are getting punished now in the public markets because investors are getting a little bit nervous about seeing a potential return. And so it is this kind of, there's almost a game theory element to it where, if you see your competitor investing all of this money in AI infrastructure, you almost feel like you have no choice but to do that. In the event that AI becomes this huge success, you want to set your company up to be able to get all that revenue by building the infrastructure. But we're headed into very uncharted territory where I think the question on everyone's minds, even these CEOs' minds, if you get them to be very honest, is it is a bit of a gamble, and it could all end up looking like a massive bubble in retrospect.
Yeah, there is that is an understandable concern, and so keep getting them to be honest and sharing that with us. We appreciate it. Berber Jin, good to have you. Thanks.
Thanks.